markets seem to be in a bit of a pause mode.
Should be a more calm Wednesday, I think, for the markets, because and I think it's good that we found a new pivot for the index at 25,750 levels. A lot of data points which have started to look a little bit more normal than what they were, a little bit skewed, a few days back. The VIX has come down towards 13, 13 and a half. Maybe I think over the next couple of days, I would believe that it should drop down to 12 or sub 12 levels. That's where I think it should normalize. This could be another good sign that we are migrating at higher levels on the index. Very good reduction in terms of open interest on the Nifty as well as on the Bank Nifty futures. So that indicates that there has been good amount of unwinding of short positions, almost 8.5% drop in the Nifty OI for the February month, as well as for the Bank Nifty, it was almost a 15.5% reduction in the open interest. These are not average numbers. These are much above par in terms of the unwinding of futures for short futures for the index futures. And I think the premium coming back to 110, 120 points for the Nifty, that all of these factors indicate that we are now looking at a normalized zone at 25,750 mark. What we need to find over here, say over the next few days, over the next 1 or 2 weeks, is the sector patterns. I think if we start to see that happening, when you start to see names like, for example, from the metal pack, capital market stocks, Bank Nifty, private sector banking names, PSU, etc., when they start to show signs of a synchronized price action, that's where the markets would gain a lot of confidence and try to challenge the next set of resistance at the 26,000 mark.
So, Kunal, what do you do today? Because in all likelihood, if we were to align with the rest of the globe, it seems like IT services could cave in hard.
Yeah, so I think like what we've seen in the last few days, Aisha, that if one sector starts to bleed up significantly, then you have the markets balancing out very well with a few of the other sectors outperforming, or at least trying to balance out. So maybe I think this could be a day where you might see large cap IT names taking a bit of a hit, but that could probably try and balance out with maybe some sort of an outperformance over there. So we need to see which pockets of outperformance is what we can expect could come back into the other sectors. For the IT names, what we may probably need to look out for is if in case these stocks break by, say, a margin of 3% to 4%, then many of these stocks would try and come back to their previous swing lows. And the ones where they've been consolidating for the last 1 or 2 months, the likes of Infosys, TCS, etc. So that could challenge a near-term trend for these stocks where they were holding up pretty well in line of a price-wise consolidation. But if that breaks, then we could be in for a much more I would say, staggered downtrend for many of these IT names.
Kunal, how do you see the change in the long positions? Because they were around 11, 11 and a half. Now they've gone up to 17% after yesterday's run-up that we saw. We saw a lot of short covering happening for Nifty as well. And from an index point of view of Nifty Bank, some long positions have also been added. Do you think that, the range of 9 to 13 that we were sitting on for last couple of months, now we are moving up in that range?
Yeah, so I think yesterday's, so what happened, Sidit, was when we opened up 26,300, 400 levels on the futures, and we immediately came back towards 25,750 mark. We spent the rest of the day at those levels. That's a good zone for futures traders to try and unwind positions, because you want the markets to be a lot more stable and not move into a 300, 400 point kind of intraday volatility. So yesterday's session was one of the days where you would start to see unwinding of futures contracts, especially on the short side. Now, the other important part is we've seen on the historical data that whenever the FI starts to unwind futures, whether it's on the long side or it's on the short side, if the margin of change is more than 20%, so for example, a few days back it was 10, 11% on the open interest on the index future side, if that jumps up to 30% plus, then is where we start to see a substantial change of trend for the index, where you start to see higher highs being made for the index. So maybe I think over the next couple of days, if the index remains calm at current levels, you might see the index futures unwinding being a little bit more prominent. And if that number jumps up to 30% plus on the index futures on the long side, that's where I would believe that you might see a substantial change of trend from the index perspective.